Good day, traders, and welcome to the premium video newsletter for June 19th, 2013. Let's start off with the economy and the recent Fed announcements. Chairman Ben Bernanke said the Feds could start scaling back its $85 billion in monthly bond purchases later this year if the economy picks up. That's a big if. He said the reduction could occur in measured steps and that the purchases could end by the middle of next year. By then, Bernanke said he thought unemployment would be at around 7% if it continues to improve at the current pace. In his statement, he said that the economy is growing moderately, and for the first time, downside risk to the outlook has diminished since the fall. My interpretation of today's events suggests that the Feds are not going to do anything in the next several weeks. If anything will occur, it will probably occur closer to 2014. I believe the Feds are hopeful that the economy will continue expanding, but it's partly being positive to prevent a sharp slide in the global economy, including the U.S. stock market. You have to remember, part of the Fed's job is to keep stability at all costs. So when you hear them speak, you have to take what they say with a grain of salt. Investors reacted by selling both stocks and bonds before the announcement. The Dow Jones Industrial Average was down 150 points soon after Bernanke's news conference began. The yield on the 10-year Treasury note shot up to 2.31%, from 2.21% just before the statements came out. Looking at our existing position in the 10-year bonds futures contracts, which trades inverse of the yield, we broke the low and our position is very profitable at this time. My profit target is 127.5 or 16.30 seconds. Therefore, I would place a limit buy order and see if your position fills overnight. If you're trading interest rate related instruments, you can extrapolate the levels by looking at the chart. Tomorrow morning, I believe, we may open lower and begin trading a bit higher as news tends to create overreaction in these markets, especially the bond market. See if you can get a quick liquidation before or near the opening tomorrow on this position. It's a good profit for holding for such a short amount of time. Looking at the intraday SP chart, it looks like the resistance from a few weeks ago did become the new support level. However, there seems to be a lot of support at the 1630 level, and I would watch that level closely for the next few trading sessions. An interesting note, I check my daily setups not only to see which stocks get a setup, but also to determine the ratio of long setups to short setups. The last few days, even though the market was moving higher, most of the setups were towards the downside. This is a very common occurrence that happens when large caps are giving traders the impression that markets are moving higher. Meanwhile, the only stocks moving higher are the large leading index stocks. The moral of the story is always check to see if the ratio of stocks declining and advancing to see where the buying is coming from. You may be surprised to see that the only reason the market is moving higher or lower is because of a handful of stocks. Also remember, these handful of stocks can control the markets only for a limited amount of time before the market falls into its place and starts to follow the majority of the companies. Another interesting development that's occurring in the US dollar. Notice the last few days it's been creating a short-term support area. This area is based on very strong fundamentals. Therefore, keep your eye on the dollar to see how much higher it will go before testing the low again. This area is very, very important for the U.S. economy because the U.S. dollar is very interest rate sensitive. I highly suggest you keep your eye on the 80.5 level. If the dollar breaks that level, expect very strong volatility from other currencies as well as the U.S. stock market. I'm very focused on this level right now. Our second existing position, PFE, was rallying strongly but turned around after the Fed's report. I would maintain my original buy stop order and see if the position is going to correct again. It certainly looks like it, so let's see where it goes during the next few days. Pfizer also has a 1-2-3 pattern to the downside, which is a long-term reversal pattern. So there's several signs suggesting that this stock is coming down. There's a few short setups for today. The first one is Franklin Resources, ticker BEN. It has a 4x4 setup. The company manages large assets for global clientele. The next 4x4 setup is Portland General Electric, ticker POR. The company provides electrical utility that serves residential, commercial, and industrial customers in Oregon. There's also a few setups on interest rate and real estate related companies. However, I believe these are setting up due to today's announcements and not due to natural occurrences, so to speak. So I don't want you to get into something that's going to turn around very quickly. Therefore, I will avoid them for today. However, take a look at the home building sector and you will see that the companies are all strongly down for the day. This is all short-term interest rates related, so I wouldn't put too much weight into it. In short, avoid buying or selling home-related stocks or ETFs for the next few days. That's it for today, and I will update you tomorrow with the latest. I hope you did not get whipsawed too much during the last few days. Have a great evening, everyone.